The Cyprus Statistical Service has now published consumer price data for March. This means that we have our first cut, so to speak, of the impact of the war in Iran on prices in Cyprus. So what does it tell us? Let's take a look. Today I'm focusing on the National Consumer Price Index rather than the EU harmonised index. This is because the Consumer Price Series gives you inflation by economic origin, not just by sector. It's a slightly different methodology than the EU harmonised one, but it's a better index for telling the story I want to tell today. So we take our CPI by origin from Cystat. It gives you a spreadsheet that looks like this. This is a screenshot of just part of it. Then you faff about tearing your hair out with pivot tables, and you faff about a bit more to create your own chart in your own company brand and to make things as clear as possible to non-specialists. So the first thing I'm showing here is the pure index. It's the fairly new issued index. So it's 2025 equals 100. Don't worry about that so much. It's just the way statisticians handle series that go on for years and years. About every 10 years, they rebase it to a more recent year. But what this shows you is how prices have changed relative to the beginning of 2025. So it isn't percentage change. I'll show you that in a minute. It's just how they have changed relative to the baseline. So the blue dotted line is consumer prices, all consumer prices, a combination of the others. The brown line is local goods. The green line is imported goods. The red line is petroleum products. And the purple line is services. I think it's obvious to everyone here that something big happened in March. Prices of petroleum products shot up. Mind you, this was after a period in which they were negative, so below 100 in this chart. Now let's take a look at how they have changed relative to the same month in the previous year. With economic statistics, it's always best to look primarily at the change relative to the same period of the previous year. Why? Because of seasonality. Think about tourism arrivals. They're always going to be higher in summer than in winter. So you want to compare like with like. Of course, arrivals shoot up in, let's say, June. But are they higher than June last year? That's what we need to know. Similarly, for prices, food prices in Cyprus often go down in summer. So again, you want to compare like with like. So what does the like with like chart tell us? We don't have many months because of the new index. It only starts in January 2025. But what you can see from this is after very negative inflation, so falling prices in the early part of 2026, prices of petroleum products went from negative inflation, so deflation of 7.4% in February, to inflation, so 2.3% in March. If you want to get geeky, that's a change of around 9 percentage points, okay? And what is more worrying is that it took local prices with it, right? You can see local goods leaping from 0 to 2.2%. And this pushed up overall consumer prices from 0.1% in February to 1.2% in March, okay? Why is that? Because the price of petrol affects so many other things. Think about it. If you're paying more for your tank of petrol, you are paying more to get goods from the warehouse to the shops. More broadly, the international price of oil affects the price of shipping, the price of refined oil products, the price of natural gas, which is often linked to or partly linked to oil. And because gas is used in the creation of fertilizer, it affects the prices of fertilizer, which affects the prices of food. And in Cyprus, because we still haven't worked out how to use all this sun for most of our electricity, it affects the price of electricity because we're still burning diesel and heavy fuel oil, and so on and so on. Okay? So let's have a look at oil prices. Before the Iran war, the news was good. You can see here that the international price of oil was down at under $60 a barrel in December 2025. And this is why you saw the price of petroleum products in Cyprus being negative before the Iran war. But then look what happens. The Iran war happens, the shipment of oil and gas products is restricted because of blockages in the Strait of Hormuz, which we have all suddenly heard about. And bam, you have this sudden increase in oil prices, okay? More worrying still is that international oil prices are close to the levels they reached before the global financial crisis in 2008. It began around August, if I remember correctly. There are some economists who say that every single global financial crisis has been preceded by sky-high international oil prices, but also combined with a lot of private sector debt. And we do have a lot of private sector debt this time. This time it's held not so much by the banks, but by what are called private equity funds, or less kindly, vulture funds. The ones that swoop in, buy up a firm, take it private, load it with a load of debt, and then sell it for a profit. So what should we expect to happen next? Well, we know that the Cyprus government tried to head off inflation by announcing a cut in excise duty on fuels, among other things. But what did this do? It turns out not a lot. It did lead to a short-term drop in prices, but it did not change the overall trend, which is upwards. Also, we can see from World Bank data that US wheat prices, which is a good proxy for international food prices, was already on the rise even before the Iran war, right? They started to climb from August 2025. And as subscribers to my monthly premium analysis know, you could already see this feeding through into inflation in Cyprus. So the overall inflation rate was low, but that was because petroleum products were negative. Other things like food prices were already on the rise, and you can expect them to continue rising. Okay. So in sum, my expectations are that higher food and fuel prices are here to stay most of this year. I'm expecting an inflation rate of 2.4% in 2026, compared with an outturn of only 0.8% in 2025. And because prices take longer to come down than to go up, even if the war ends today, the price impact will linger. My best case scenario is the war ends soon, fuel prices will fall, but it will be gradual, and I think they will still carry what I'm calling a war risk premium, recent war risk premium, meaning insurance companies will still want you to pay higher premiums because the war could break out again, and so on. The people who insure the ships that bring us the food and the fuel, they'll all be jittery. So the transport people will have to pay more. The people buying the food will have to pay more, and therefore we will have to be paying more. Okay. And the worst case scenario, of course, is that the war drags on. Shipments are still blocked. This leads to fuel shortages, food shortages, much higher inflation, cancelled flights and holidays, and quite possibly a recession in Cyprus, as we had right after the global financial crisis in 2008. First recession since 1974 was in 2009. That's it from me. This is my shameless plug. I do a premium priced deep dive into Cyprus, the economy, natural gas, electricity, stability of the banks, the health of the public finances, where the economy is heading, and also the economy of Northern Cyprus. There's really nothing like it out there. Or I also provide bespoke consultations for some blue chip clients, if that's what you're interested in. That's it for this week. Thank you for listening.